morning. Good morning.
We do open lower. S&P's down 13 of the last 16 days.
Well, because they're trying to wear us all out and make us go home. But forget it. We have strength. We have power. We're not going anywhere. There's nothing really to hang your hat on. But don't get discouraged because it is going to happen. There is going to be a moment where the Fed is going to push us. Wages down. Not happening yet. Food will come down, believe it or not. And rent will come down. Housing will come down. What else will come down? We're not there yet.
That was us on October 12th of 2022, Jim, where the CPI print had just come in 8.2 year on year.
It was, I think the culmination was where it was the darkest before dawn moment. Interestingly enough, I managed to say don't get discouraged, yet the things I said would happen haven't happened yet. Rent has not come down.
We're not running 8% inflation.
No, but we're not. No, look, things are.
Rent hasn't come down. Housing hasn't come down.
No, but the rest, the other things have, and housing really isn't in the CPI. We know that.
Right.
I think that the big lever here is this oil that you mentioned. If oil goes down, we're going to get bailed out big time.
Well, oil's below 60 right now.
First time in 6 months.
Yeah, I think it matters.
Our Bob, Jim, 184. That's the lowest since 2021, early 21. So you would expect some relief at the pump.
I think so. Plus, I mean, I have to tell you, when you look at the banker, they have data centers being built in their neighborhoods. 6,000 people get hired by the data to build a data center.
A lot of people get hired to build on it. Once it's done, not that many people working on it.
But you do get an ecosystem.
Let's get the opening bell on the CNBC Real-Time Exchange. To the big board, it's Phoenix Education Partners, provider of online higher ed, celebrating an IPO yesterday. At the NASDAQ, debt purchaser Jefferson Capital, celebrating its listing as we try to hang on to gains for the week.
Right. I mean, I think that a couple stocks to key on. You do need to see Apple going up. Okay. You need to see Levi Strauss stabilize because they had a good quarter last time. We didn't have a lot of good quarters. You need to see the housing stocks, all of them getting price target reduction. Somehow trying to bounce here. The charts are all horrible on all of them. And then we need to see the data center stories day up. The one you want to watch, do you want to watch Marvell? And then Vertiv, which is the company that does the cooling. And they're both hot as a business. So let's see what happens.
You mentioned Levi's. You're going to talk to them next week. But Michelle Goss, they are raising price, and that comes on a week where Disney is also announced some park passes going higher.
What the heck is going on there that they did that? Holy, okay, they could say, well, this week we have too much demand, but I just think when I saw those numbers, I said, okay, so now it's really a very, very, one of the most expensive vacations there is. But there are a lot of people
Disney, they've raised price at the parks.
Yeah, big.
Not to mention Disney Plus's price has also gone up.
Did you get
Although you
that?
get a
Did you
lot
get that
more
bill?
now. Well, I'm
got that
the
bill.
idiot who's still paying for Hulu, Disney Plus, all separately. I don't know why we're doing that.
Well, you can change that. I'll show you.
I can't. I just there's so many things on my list. I can't get to it. It's just
You're just jammed.
I'm
Tell
jammed.
me you're
I'm jammed. Would you take care of that for me?
All right,
Did you
I'm
find
on
out what credit card
I have
that's
a
being
s- I have a
charged to?
subscription
Would you
service that
cancel that
changes your
and get us the
subscription
whole package, maybe even including ESPN, and then get me off cable, but I'll keep my YouTube TV? Will you take care of all
I'll
that
give
for
you
me?
a Schefter. You'll do fine.
Okay, thank you.
I'll close down.
People are making lists of these. You mentioned IonQ earlier, Jim, but Joby,
Right.
Qubit, Tilray with a mixed shelf today. Everybody's coming.
Oh, yeah. Well, look, this is the problem. I said the other day, once they start issuing, like the day that Nebius issues stock, we're like, there's really just this, they finally figured it out. And the bankers are calling them and saying, listen, you got to do it, you got to do it, you got to do it. And so they're going to do it. And there's going to be too much supply, and then we're going to have to rethink the whole thing. We don't want too much supply.
We're going to have to rethink the whole thing?
Yes.
What whole thing are we
Because
talking
this
about
part
here?
of the market, this part of the market's out of control.
Right.
Okay? It's out of control.
Right.
Liz Ann Saunders today had the April 8th to date gains for a bunch of baskets. Drones, 366%. Quantum, 315. Memes, 123%. Non-profitable tech, 111%.
Liz Ann Saunders does great. I follow her on Twitter. Her work is unassailable. That's exactly what I was
So why
talking
shouldn't that concern me for the broader market then?
Because it's contained right now. It's contained.
Until it's not.
Well, I mean, do you want to go against Michael Dell, who reported a great quarter?
I would never go against Michael Dell.
Right. Well,
Great American.
Right. Well, that's like Jeff Dukas. You're saying
He's a greater American.
Okay. But I say that right now it's cordoned off. I mean, look, my travel trust owns
What
Cisco.
the fuck?
Okay? Now, Cisco was at, remember, was at 400
This is so weird.
Half a trillion in
Cisco
2000.
sells
Yeah,
at
it was
70.
the largest market cap company for a period of
Right,
time.
well, it sold it, what, 40 times already? It sells at 17.
By the way, can we go to a
17.
25-year chart? I don't know that we
Go
can.
ahead. Go
Because
ahead.
it would show you what
Like,
sometimes it doesn't
Chuck's
make
in the
sense.
office today. We should just call Chuck. Chuck Robinson.
You know,
What?
why do we only
good,
have
I'll close
20
back
years?
up. I didn't
Why
let
do we
stock
only
go
have
down.
20 years? Why can't we get 25? Why isn't that a possibility? We can. We do have the technology.
Oh, nice.
I
By the
didn't-
way, Morgan Stanley today ups Cisco to $77.
I like that.
Yeah.
Chuck, give us a call, Chuck.
There, you
That's
see the
nice.
very end there? Look at that. The very end of that. There it is. October. So the stock's up 25% in 25 years. I would venture to say that's not a good return for a long-term investor.
No.
Well, how about do a good long
All
chart
right,
of the
98. There you go. 98.
transports. Jim, the Dow Jones transports flat for the past 4 years, 4 and a change.
Back to the old days.
Yeah.
They came under their cost of capital, yet they have such good things to say. Master was so great. David, did you see if he does? You follow Medicare Advantage, David?
Wow, look at this.
You follow Medicare Advantage?
I don't
bet she
follow
does
it. Not yet, because I'm
Well, when you
not
get into the star
eligible.
game, it's kind of like the stars, like Michelin. I have the Michelin. I have the Michelin United Health, but Aetna had really good numbers at CVS. It's
I mean, they got the stars,
Yeah,
right,
it's like
which
3-star.
helps them on what, reimbursement or on the various
Did you
parts
get
of.
It's like 3-star.
Helps them on what, reimbursement or on the various parts of their
Deal.
plans.
It's a better deal.
No, but
I
it's also
switched back
important
and
for
forth.
them.
I had Humana, then I switched United. You're playing the game.
Understood. All right,
And
but you're
how
referring.
about Trump Direct? Trump
You're
Direct?
just confusing people now, though. You know that.
No, well, that's because you're not on Medicare. You don't know how it
Do
works.
you want to tell them the actual news that happened with Aetna?
Well, there's a rating. There's
Yes.
a rating system.
Yes.
And the rating system is what then you go to meet your person and you say who had the best ratings, and then you switch.
And who
That's what we
gives
do.
out these ratings? Is it CMS or I forget who it is, but
Yeah,
Right.
Centers for Medicare and Medicaid Services.
Right.
Well, it's just worth it because you want a good deal because
Matt,
your
now
wife
understand.
pay-
That's
see,
right.
You're paid by a company.
Yes.
Okay, so you don't know jack.
No.
When I go up there, like I get this medicine Repatha, okay,
Yes.
and it's like $1,200 a month, and I just want to get an Amgen's got some Amgen Direct, and then I get the Trump Direct, and I just want to stop paying so much for a medicine that is like not covered, okay?
the more stars you get, the better, and that's why the stock is up.
They're a genius. Have you ever been in a situation you have more stars, it's worse? Like Danielle. Hey, I was at Bernard Den the other day. Jesus, stuck with 3. I mean, what are you doing? Saga only has 2.
I'm gonna ride this until
No, usually more stars is
6800
better.
Yeah, right.
2 calls.
Right. Well, this is the way America works. That's why CBS can probably really break out here. Because Aetna did not have a plan that I thought was a killer plan. I was wrong. Aqua's now up 2. They're doing this to spite me. Right, there guys out there that Kramer just said Aqua's down. Let's go move Aqua. I'm not kidding. He thinks that I am wrong. David, get up at 3:30 and watch what they move. That's when they move their stocks. They move them. There's no resistance.
I hear you.
You know what they do? Nothing.
Nothing.
It's a company about nothing. No, it's small nuclear reactor, and it's got contracts. David, they have contracts.
By the way,
What?
coming
I
back
love-
to that,
I love
the
Apple.
old Bitcoin miners that now are
love that
data
story.
center companies. About Power Applied Digital is up 27%
Well,
on
they're in
earnings, and apparently they also
they're in
talked
North
about
Dakota.
another customer. They've done deals with CoreWeave
They're in
already.
North Dakota. See, David, they're at the secret North Dakota
they
data
have
center that I
access.
actually can't find them.
They have deals, obviously, where they already have access to a lot of power. That's what matters. Take a look there, and they reported earnings, but they also seemingly mentioned being in advanced discussions about another gigawatt deal sale with a potential hyperscaler. I guess that's me saying that. They didn't say specifically who the customer might be.
No one knows.
But this gets back to what we put off, but now we can talk about Core Scientific CoreWeave. Right, that deal is for, what is it, 0.1235 shares of CoreWeave. It was announced back in June. The vote on it is taking place on October 30th. Core Scientific shareholders will be voting on whether to approve that transaction. They're going to say no. There are any number of activists, but I also know some of the larger shareholders than even the activists. They're going to say no.
But there's no
and the reason why is this. If Core Scientific had been able to just trade as a public company instead of doing a deal, its stock price might look more like Applied Digital or any of the other what we call comps that you're looking at right there, as opposed to
But CoreWeave's best and final. CoreWeave's not budging, David.
InTrader has
CoreWeave's not
said
budging.
that, right?
So my they're not budging.
They don't care if they win or not. I mean, if they don't get the deal,
Well,
it's not important to them.
I'm not on their board, but they're not. He said it. I mean, people have said it and going up.
And then I'll be curious to see if and when this deal is voted down. Okay, first of all, I can have a long list of companies that have said we won't budge, and then of course they do when they see they're going to lose the vote and they want to own the stock.
Where it was? Why not put the price of where it was before CoreWeave?
But that doesn't matter because all of it
6,800 needs to hold.
Plus, look at the numbers.
So look, they got
6,800 needs to hold.
No, he wasn't because he's going to not get the vote.
His stock went up.
Why? Will you just be objective for a second?
No, I want to be a subjective.
All right, I know you love InTrader. That's great, but just be objective.
I'm going to send him a
Be
new
objective.
T-shirt. What?
They got to either raise
No, I'm just saying.
or they're not going to get the company.
I'm giving you a straight dope that he says he's not going to raise. I'm not
Okay.
saying he shouldn't raise or should
If
raise.
he doesn't raise, he doesn't
He's
get
not
the
gonna
company.
get it.
And then the question is, does somebody else come along and want to buy this thing?
That makes sense.
Yes.
Who would it be?
Nebius?
Nebius needs something.
Maybe it's
Nebius can use its stock price. Nebius also walked up by
I know.
retail.
Nebius has been incredible too. They did that Microsoft deal.
I bet Nebius at GTC conference at the nice conference that we have for NVIDIA. And I said, look at those guys. No one's going over. Their booth is empty. I'll just go over there just to talk to them. I felt bad for them. Now I don't feel bad for them now.
Wow, look at Nebius.
You could have gone up there and talked to them all your life. They had I said, hey, you guys doing?
Who? I could have talked to
When I went to
Nebius?
the Nebius booth, and I felt bad because no one was at the Nebius booth. Now if they had a booth, it would be like the toughest thing in the world.
Where was this?
At the NVIDIA conference.
Oh.
They had a booth. They were terrific, but there were three guys. I said, oh, let me throw them a bone. I wish I had a Nebius bone now.
Now to your point, right?
Right?
I know.
Yeah.
They could probably put up a higher ratio than CoreWeave, but we'll see.
Oh my God.
We'll see.
They could be.
See what happens. Who knows? Guys, I want to do an update as well on another deal, potentially. Warner Brothers and Paramount.
Really?
Yeah,
This
really.
weekend?
In fact, we're going to make it a favor report. That means I get to talk for a little while. We'll see. I wanted to update people because we've been following this, obviously, potential deal for quite some time, and there's been a lot of other reporting around it. Let me at least share what I'm aware of at the present moment. And the main part of which is these two companies are talking. They've been talking for weeks about a deal in which Paramount would buy Warner Brothers Discovery for a largely cash deal, but with some stock. What is at issue, of course, is exactly what the price would be and what the composition of said offer would be as well when it comes to cash and stock. And on this part, it doesn't appear that a great deal of progress is being made, based at least on the conversations I've had with people close to the situation. It doesn't say that they won't be able to make progress. It doesn't say that this board of directors at some point won't say, oh, there's a number we could take. But it does not appear that has yet been the case. Obviously, were it the case, we probably would have gotten a press release telling us of this actual transaction. Now, on the Warner Brothers side, as we've said many times, they're looking at a split of the company that they believe will create real value. And there certainly is a belief as well that when that split occurs, let's call it April of next year, almost immediately thereafter, there may be great interest in the studio and streaming part of the business that will be separated from the global networks. And that a potential bidder there could pay a very large price that would be in excess of whatever Paramount is currently able to offer. That said, time, risk, any number of other things, particularly given the history of this company, the difficulties that it still faces when it comes to linear networks, you would imagine that if in fact they were able to get up to a price that I've indicated previously, based on at least informed speculation, could be as high as, let's say, 24, largely cash, that the board of directors of Warner Brothers would say, we'll take that. Don't believe that that has been the case as yet. And so the question is, if and when Paramount will say, we haven't been able to make enough progress here, we're at least going to make our offer public, whatever that offer may be, and we're going to leave it up to shareholders to try to pressure the company. They don't have any real mechanism that typically companies would rely on in terms of a forcing function here, a la a shareholder vote, the likes of which we were just talking about, for example, with Core Scientific or some other mechanism. The only one, you can call a special meeting, consent, but you got to get 20% of the votes in order to call that special meeting. And those shareholders who vote have had to hold their shares for at least a year. That's a high bar, very high. So, Jim, this is going to be an interesting one. My sense is, given the weeks that have already taken place, gone by since the original leak of their interest at Paramount, that they're either going to want to try and get something done privately fairly soon, or perhaps we will see it. Larry Ellison, my understanding is, remains committed to a potential transaction here, is fully bought in on it. It's not as though there would not be other investors that conceivably would come along. And there is a willingness on the part of Paramount, is my understanding as well, to at least offer, for example, David Zaslav a chairman's title of some kind for a period of time and things of that nature, so they could address, the so-called social issues that also can become important. But ultimately, this is going to be up to the board of Warner Brothers if they hit a number that is,
That is the orb. I don't like that.
Can accept. It's Anthony Noto. It's Anton
You
Lee.
may reverse from there.
It's, any number of strong directors on that board.
Heavyweight board that's trying to
It's a
bring out
fairly
value.
strong board.
Nice.
Conceivably will sell.
Nice.
It's not just about what David Zaslav wants.
Nice.
David, this is the most logical deal you could have in a very challenged industry where you see the stocks. Many of these stocks, this stock, of course, was doing a little bit better before this because of the studio.
But it was also a $10 stock
Right,
not that long ago before. Yeah.
This is what all of us are hoping in terms of, remember you said in Trader that I'm on the board, that you said I was working with CoreWeave.
No, I just said
do
you weren't
work-
being objective.
Right, well, I don't want to be objective about our industry. These are the things that have to happen for our industry to have some sustenance.
And there would be enormous synergies there.
Yeah, I'm saying you can
And
fire
of course,
everybody.
putting
Sorry.
CNN and CBS together, 200 million streaming subs, the idea of making 40 movies a year when you put Paramount
6807 is the
together. These are all the benefits
target for at least
Paramount would see.
2 of these guys.
Plus on that stock price, which is hanging in there, but obviously, as we've said many times, doesn't have a particularly large float.
But there
Yeah.
is, without a doubt, a raison d'etre for doing this deal. You want to own that one because it's going to be a winner in a very challenging
And as
industry.
I've made the point many times as well, this is Paramount's opportunity because there is no one else expected to come in here, as I've said many times.
But why did they
during
do
this
it if not for
period
this?
where
Why
they
did
would make a bid for the entire company as opposed to waiting to be on the other end of the split when you conceivably would be facing
But don't you
competition?
think they did this in order to be able to get that? I mean, it's such a great thing for Paramount if they get it. If
Almost to
Paramount
the
doesn't get
pit.
it, then what is it going to do? Like, what has it got?
I don't know. I don't know. It's
really
it's again, linear
You have
networks
the story.
are challenged. So Carl, we'll keep an eye on it there. You see what's going on.
Right.
Challenge.
One thing we haven't mentioned, Jim, for all of the concerns about the consumer and auto delinquencies and farm foreclosures, is the purchase or the swap of Argentinian pesos. Yes, that we got yesterday out of Treasury.
Yeah, I have Nbhd on from Banco Santander, and this thing is, I'm looking. She is the largest. She is Brazil's her largest business, but I do think that this is fascinating because all we ever hear about is that the Treasury Secretary stubbed his toe here, made a mistake here. You got some election coming up. We don't know.
Right.
I don't to me, it seems like it's a little
Yeah.
dicey. Argentina was the 11th best economy in the world, like
Yeah,
1912.
our first intervention in EM FX, I think since the late 90s. And Evercore today thinks maybe might not be enough. Got to see how these midterms come together.
We need some best in bonds.
Possibly. When it comes to the credit markets as well, still keeping an eye on the alternative asset managers, certainly focused on private credit. This first brand's bankruptcy has unsettled
Our
a lot
1 week of the
people.
HYG will get some people's attention, Jim.
With
I think this
high
private-
yield, and then you take a look at the shares of
I trust the
Apollo
setup.
or Ares
I know.
or even Blackstone. Now, today, not really moving too much, but they have not had a good week.
But you have got to stay focused on private credit because everyone talks about it. No one knows what it is, and everyone wants to work it.
Yeah, there's a look at what the
High yield,
HYG's done in the past few days. For the 3 seconds it was.
Troubling parts of this economy. What can I say? There are troubling parts.
As we go to break, watch bonds. Definitely more bond friendliness today. As Waller told Leisman, he thinks payrolls will be negative for the past several months. We'll get Umish in about 13 minutes. Don't go anywhere.
Wow. That was 50 cents from Target. Jesus fuck, bro. Yeah, I should have. Every time I try to trust a fucking setup, this happens to me. Every fucking time. Every fucking time. Jesus Christ, this is a dump. Wow. I can't fucking believe it. Wow. Wow. Very frustrating. 50 cents from Target. 50 cents from Target. Wow. Well, that's all right. No, a quarter from Target. Quarter from Target? No. 50 cents from Target. Wow. 2 pips. That sucks. That was a turnaround, man. That was a turnaround, boys. Just short of it.
Watch Intel today. That's a new 52-week high. This was an $18 stock on August 1st. That's a double since. Today, TD Cowen goes from 20 to 35.
Well, Lip Bhutan, I said he was the real guy. David doubted me. I said, you bet on Lip Bhutan. Remember? And that was
You
what
did.
What happened there is right.
You absolutely were.
He's the godfather of semis.
You were absolutely right.
People didn't know he's the godfather of
I mean,
semis.
I don't know what's going to happen to the company, but you were right about the stock.
Well, anyone wants to work with him, including, by the way, Jensen Huang. They tried to put Jensen Huang out of business for 30 years, but now he's their great partner because this Lip Bhutan comes in peace.
Good thing he wasn't fired on the president's recommendation.
That's right. I forgot about that.
That was
He took it back.
For now, the Dow's up 170. We're back in a minute.
I'm afraid if I get in there, I get chopped.
Let's get to Jim and stop trading.
You don't think of innovation when it comes to snacks, when it comes to drinks. That's wrong. Ramon Laguarta is going to save his job and prosper because the roster of new things that he introduced the other day, his stock's now up almost 10 straight points. The LA people have to be impressed. I've always liked Ramon. I think that he's been the only guy who has said, listen, GOP-1 is a threat to mine. He issued a very good product that could do that. I like his honesty. All these other guys saying, listen, don't worry about it, don't worry about it. He said, look, I got a real problem. He also, with food dye, I got a real problem. He aggressively challenges these things, and he's in a very challenged industry. But I like what he's doing.
That's some nice follow-through to yesterday's gains.
Yes, because it's a different PepsiCo overnight. But in actuality, he's been working on getting the color out, the dyes out. He's been working on new ideas, and it's paying off. And I'm glad because he is a decent, good guy. He's got to get this ship going again. He will.
Yeah, some of his comments about the lower cohort were concerning, but yes, to your general point.
Yeah, look, I think all of snacks went up a lot in price. That's one of the my daughter's snack, her potato chips, talk a lot about the price. It's like, geez, the price is too high.
Yeah, well, I also thought interesting his comments about the Hispanic community, which is an important
Yes.
same as Constellation. Just people are not getting together because they're worried about immigration raids, frankly, and therefore they're not buying beer, they're not buying snacks.
Jim, we got to promote next week, just to let viewers know.
Dreamforce, but it's much more than Dreamforce. We're going out there to see a lot of companies. And these are companies that you hear about all the time. You hear about an ARM all the time and say, well, what are they really doing when the stock's going up? Broadcom's been an amazing stock. Domino's stock's been going down. Starbucks, most interesting because I think they're doing better. It doesn't seem to matter. Lyft is broken out here. Rubik's broken out. Accenture not broken out. SoFi broke out. We've got to cover these companies.
Wow.
What?
It's just huge.
Well,
I got just two guys.
well, I'll tell you, I'll
That's
send
all
some
I got.
guys to you.
They happen to be the CEOs of Oracle.
So you're saying that all my CEOs added up together
The
are
sum
not
of the
as good
parts?
as your CEOs?
I
They're not
did
good
not
CEOs, right?
say that. I
No,
did
you
not even
implied
imply
You
that.
implied that. I mean,
No,
don't even,
you're
don't
reading
even go
into
there.
it.
And you're really going to the sphere. What's playing the sphere? That's what this is about, right?
The Eagles, man. Not the Eagles.
Not after last night. Oh, not the other.
Jim, we'll see you tonight.
Okay,
Mad Money,
very
6
good.
p.m.
Thank
Eastern
you.
Time. Don't go away. Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with David Faber, Leslie Picker here at Post 9 of the New York Stock Exchange. Sarah Eisen has the morning off, trying to wrap up the week with a little bit of risk on. Every sector is higher except for energy and healthcare. 10-year getting back below 4.1. VIX still around 16. We're watching, obviously, the government shutdown now in day 10. Coming up this hour, Lululemon founder sours on the company. Chip Wilson slamming the company's trajectory in a new full-page ad in the Journal, saying it's in a nosedive and needs to, quote, stop chasing Wall Street at the expense of customers. Wilson's going to join us in an exclusive interview, talk about his criticism of the board. Plus, was Amazon's October Prime Day a dud? We'll talk about reports of soft demand and if it is a red flag for the company.
First, let's get some breaking consumer data. It's just crossing, and Rick Santelli has it for us. Rick?
Yes, Dave, we still get some numbers that aren't going through the government. Here's University of Michigan sentiment and the inflation gauges. October preliminary view, 55.0 on the headline, a bit better than expectations, very close sequentially to the 55.1 in the rearview mirror for our September final read. And that compares, well, at 55.0, you'd have to go back to May of this year to find a lower number current conditions, pretty juicy.
Might
here.
go short from
61.0,
here,
better
but I
than
need
expected,
price
sequentially higher
to
than
show me
60.4.
that's
Look
the
at
deal.
expectations, 51.2, a little bit of a disappointment in both directions, less than expected, less than 51.7 in the rearview mirror. You have to go to May of this year to find a lower number. Now, the inflation numbers, 4.6 on 1 year, that's 1/10 less than we're expecting and less than the 4.7 in the rearview mirror. 4.6 will be the lowest read going back to February when we were at 4.3. And finally, 5 to 10 year inflation stays at 3.7, both matching expectations and in the rear view
It's kind
mirror.
of a hard chop
To
right
find
now.
a lower number, you'd have to go back to August at 3.5 to find a higher number. You're in June at 4.0 to give you some context there. Very quickly, the government shutdown has caused us not to see construction spending, 2 jobless claims, factory orders, September jobs report, wholesale inventories and sales. However, maybe CPI on Wednesday scheduled at least the 15th of October. It may be released. I'm not sure if that's going to be the day. Think COLA here in terms of the reason why. And finally, on the week, 409 is current 10-year. It settled at 412 last week, down 3 basis points. David, back to you.
Rick, thank you. Rick Santelli in Chicago. Let's stick with the macro picture. Federal Reserve Governor and Fed Chair shortlist candidate Christopher Waller joined CNBC earlier this morning. He weighed in on the Fed's rate path.
I'm still in the belief we need to cut rates, but we need to kind of be cautious about it, because here's one of the things you're looking at. You're seeing this very weak labor market, but GDP growth seems pretty good, and GDP now is forecasting like close to 4%. You can't have negative job growth and 4% GDP growth. Something's got to give. Either the labor market rebounds to match the GDP growth, or that GDP growth is going to pull back.
Let's bring in Gabriela Santos, Chief Market Strategist for the Americas at JP Morgan Asset Management. You heard Waller there. I'm not curious to get your thoughts. Is one going to give, and which one?
So I think it's interesting that even Governor Waller, one of the most dovish members, is also repeating what we hear from other Fed members.
This
We
could
saw
accelerate
minutes
some, guys.
released earlier this week, which is that this is really just a normalization of rates. This is not an accommodation of policy. And I do think the futures market is now better priced for it versus peak dovishness in September. Rate cut has been taken out, and it's just 100 basis points over the next year to get us to that neutral of about 3%. I think that's the right reading. In terms of which one will give a little bit more, we think it's the GDP report. It's been particularly strong. Second quarter over 3% is our estimate for the third quarter as well. But we don't think the momentum is accelerating that much. So we might actually get a pretty weak report in the fourth quarter. We're not saying recession by any stretch, just that there's a lot of noise in the data. And if you look through it, it's an okay economy, not a red hot one.
What are you looking through when you say a lot of noise?
Yeah. So the first half of the year, so much noise from net exports, subtracting 5 percentage points, then adding 5 percentage points from inventories as well. And then beneath the surface, for the consumer specifically, very weak first quarter, and then a strong rebound in the second quarter into the third. When we look at our Chase data for high-frequency data, we're seeing a little bit of a slowdown in October in consumer spending, especially around discretionary. So we're very interested in hearing from the consumer companies later in the earnings season, which is about to kick off, exactly how much of a slowdown have they been seeing here going into October. Again, no major alarm bells, but just one reason that we're cautious about some of this very cyclical rally in the market we've seen since the middle of the summer. So very unprofitable, cyclical type of companies rebounding, and we think that's a bit short-lived, given that it's just an okay economy.
And I know typically the equity markets don't respond to government shutdowns. I guess the longer they go on, potentially there is some reaction there. If some of these furloughs do turn into permanent layoffs, though, could that impact what might otherwise be a fragile labor market at this juncture?
I do think, yes, equity markets are rightfully looking through the shutdown noise and just focusing on what are the key drivers, the secular AI trend, and the earnings season coming up, which we expect to be quite good again. double digits likely for the fourth quarter in a row. In terms of the shutdown itself, part of it is this data fog. We don't think we will get CPI next week. Still enough there for the Fed to cut rates by the end of the month. But again, the longer it goes on, if we don't have any October data, the more foggy it becomes. Otherwise, in terms of the labor market, we have seen really since January negative jobs added from the federal government, and we might even see more already without any additional measures because of some of those 6-month provisions before federal workers drop off. I do think the Fed looks beyond that, really looks at private sector hiring, and is taking a little bit of a warning sign from just the cooling there in private sector to basically a standstill, and especially only coming from an industry or two at this point.
Yeah,
Wow, that was messed up.
Payrolls were probably negative for the past several months.
Yeah.
We're on consumer. We're about 50 days away from Black Friday. We had a couple rough days for the XRT this week, the retail ETF. I noticed on some Chase card spend that restaurants and bars went negative in September. I mean, to what degree is that a worry? And would it even move headline given the strength of the AI trade?
So I think for consumer companies, they're in a tight spot still. So you've got just the consumer initially very focused on discretionary core goods spending, especially in the second quarter into the third. That seems to be fizzling off a bit. And then kind of trading places in terms of where the services spending is going was very weak on airlines and travel earlier in the year, was strong on restaurants, and it seems to be trading places a bit. So exactly where the consumer is spending is shifting, but the overall magnitude of it, I would still call it okay, rather than particularly strong. And then the last thing for retailers that we'll be watching here in the third quarter are margins, right? So margins have been actually surprisingly decent despite the tariff headwinds. So what exactly are they saying about their ability to pass this on or cut costs otherwise in the third and especially into the fourth quarter?
Gabriella, thank you. Always appreciate it.
Thank you.
Over
Bad
30
position,
minutes
guys.
into the trading session here. Three big movers we're watching. Data center company Applied Digital surging on a big revenue beat driven by, yes, AI demand for their products. The stock now up more than 400% since January and up 31.5% at this hour. Levi Strauss shares falling despite boosting their full-year outlook as price hikes help margins, but tariff costs continue to be a headwind. Those shares down almost 10% right now. And Venture Global shares slumping after the company lost an arbitration case against oil giant BP over disputed and undelivered gas shipments, leaving Venture Global potentially facing billions of dollars in damages.
What's helping me is that the 6800s right there. Might be a rejection point, but I am. That would be this is a longish position.
Plus, was Amazon's October Prime Day sale a dud? We're going to discuss if the company missed the mark with customers.
And basketball diplomacy will take you live to Macau, the site of today's NBA game between the Brooklyn Nets and the Phoenix Suns, the first in China since 2019. Squawk on the Street is back after this.
I need to be lucky here, boys. Might fail. It doesn't look like it will. That's the problem. The only thing is holding me on this trade is because I'm badly positioned, but 6800's right there, so that still might hold as resistance. So I'm gonna watch. It was like $150 up today. Give it back, but. precision is often met with negative sentiment. So we had one good news, slightly good, one bad about consumer sentiment, but I don't think this is gonna hold us. Is holding kinda. There you go. There you go. I saw 5 right there.
Welcome back.
There you
Amazon
go.
kicking off the holiday shopping season this week with its Prime Big Deal Days, but some
Bar over
shoppers
bar over
questioning
bar
how
over bar over
valuable
bar on the
bargains
5.
really
Look,
were. The
bar over
Washington
bar
Post
over
says
bar.
some items actually increased in price compared to the week before, and others that were marketed as discounted hadn't actually changed in price at all. Joining us now is Evercore ISI Head of Internet Research, Mark Mahaney. He has an outperform rating and a $280 price target for the stock. Mark, I'm sure you did way more channel checks than I did here, but I did put an item into my cart, and then a few hours later, the discount disappeared. It was just kind of regular price
This
again.
could break down, boys.
Just broadly speaking,
This
what
could
do
be
you think
finally.
this means for the brand promise that Amazon
Wow,
offers
finally
its
the
customers, and does it
setup
degrade
that was
trust
trying to
a
get
little
here
bit?
that work is gonna probably work later.
I guess it could.
Like work
we
like
do
15
our
minutes
annual
later.
surveys on Amazon, and when we did it about
Let's
2
see.
months ago, it actually
I'll
reached
hold this
record high
5.
levels for us in terms of in terms of where people like to shop online, and we test things like brand strength, price, selection, and convenience. So I haven't seen any change there. I read that Washington Post article this morning. I thought that was pretty negative. A little skeptical of the conclusions, but I don't have anything better. But the channel checks that we've done on the Prime Day over the last 2 days, yeah, it did come in a little bit kind of soft or a little bit light. Now, you have to compare that with the 4-day Prime Day that they did in July, so it's hard to compare 2 with 4 days. And it's possible that it reflects a little bit of consumer softness. It's possible that's in there. So it's hard to know. But yeah, I don't think it certainly wasn't overwhelming. And the question is,
I'll hold this for the bigger picture.
I think there are other reasons to like Amazon. But yeah, this was a little bit of a soft report, I'd say.
So I want to get into those other reasons as well, but first, you noted the softness, at least in terms of how engaged people were with Prime Day and
86.50.
spending. Does that indicate to you this dynamic that the Washington Post laid out? Where
Yeah,
people thought they
86.50
were
would
getting
sell.
deals, they opted not to really go all in on its Prime Day, or do you
We
think
sell
it is
3.
the consumer getting weaker? And this is just the first indication of that.
It's very hard to know, Leslie. I imagine it's probably a little bit of both. But even in our retail tracking that my colleague Greg Melnick on the retail side does, we're not seeing any. We're seeing a little bit of a slowdown in retail spend, but it's nothing. It's not dramatic. And Amazon is so big now. 10% of retail sales, kind of the same size as Walmart. If there really were a slowdown, Amazon would see it. So. There may be a modest slowdown or maybe some uncertainty.
There you go. So 3 interest rate right there. I'm gonna hold this too.
Our survey work, I'm going to lean into that more than I will into the
All the way to 67.74 if we have a huge breakdown.
When we ask people where they get the best price and selection and convenience, especially on price, there's just no change. Amazon is consistently.
This is my breakdown, guys.
This is
My
their algorithm.
accelerate.
They price to tie the lowest price out there, and they've consistently done this for years, and I don't think that's changed. So I'm going to put a.
It's funny how the market goes, huh?
I don't think
I'm so glad I was aware that this was going on here. And also the fact that I had some wins before, that my loss wouldn't be that bad. So I'm gonna hope for a breakdown to 5.
And I'm just curious, what your sort of reads are right now in terms of
This is
margins
gonna accelerate,
there,
dudes.
given that's been such a focus for investors at that time.
That's all. If this fails, there's a lot of potential to go way lower, because you have the lower day, the bottom of the orb, a few EMAs, and the 5 daily SMA right at 85. If this 5 closes under, comes retested, and then fails again, we going down. I'm gonna hold this position.
versus at that backlog.
I'm gonna hold this
accelerated the
position.
Last quarter, it exited at 25% year-over-year growth. That should be a good leading indicator. Secondly, the industry as a whole, I mean, we are seeing an inflection up because of AI in cloud compute, cloud storage needs. Third is the supply constraints that Amazon and other people have talked about, we think are gradually getting addressed, i.e. there's more NVIDIA chips out there. And finally, they've got this Anthropic deal. Anthropic seems to be winning the Gen AI enterprise race, at least for now. That's a major customer for AWS, and that should help with that acceleration. So we think we will get this acceleration. If AWS can leave this year, exit this year, growing close to 20% year over year, this stock gaps up materially. That's one of the reasons Amazon's my number one pick right now.
Yeah,
Wow.
obviously, we see the year-to-date performance. Hey, Mark, I like to take an opportunity when I see somebody who's been around for a while.
It's a big bounce.
to sort of get
Yeah,
your sense of
that
some
was a
of the
big level right there. If that level
This period
to
versus
break,
the
it
one we all
was
lived through in terms of the internet boom
would
of
be
the
something
mid to late
special.
90s and into 2000. Do you see it? Is there anything concerning
It's trying
you
to
in
stay
terms
above
of
the
a
5.
bubble building, perhaps, in the broader AI ecosystem here that is in some way suggestive of what we saw in the late 90s?
I'm gonna trust the setup. This is still a short.
I'm going to drastically oversimplify. Here's the big difference. There's more
This is still a
cash
short.
on the balance sheets of the major tech stocks than there was market cap back then. I think that statement is probably true. I mean, if it's not, it's darn close to true. Like, hundreds of billions of cash. I mean, these companies are so profitable now, whereas back in the dot-com time, I think there was one company that I looked at in the internet space that was profitable. That was eBay, and that was it. And so, there's just the
This is scary indeed, though.
It was so much greater back then.
It's a big bounce,
Risk, and so
but
is
not a
the
lot of
uncertainty.
volume candle-wise.
You've got
So
proven management teams now with
hopefully this is the
huge,
end of the 2-minute candle. Look, the volume's gonna stay.
So
It's gonna have
that's
like
the big difference.
roll down,
That's the big
roll
difference.
down there.
The similarity is,
Let's see.
I think some of this AI spending, I'm sure these companies, the management
That was a
teams
good
I look
fight,
at,
though.
I think have a mentality right now that the biggest mistake they could make would be to underinvest in AI. So that probably is leading to somewhat overly aggressive AI spend. But look,
Ah,
we've seen this
fuck
return on
me, bro.
AI. If you look at the revenue per
That's
employee,
crazy.
4 major hyperscalers, throw it in there. Microsoft, Amazon,
That is
Google,
crazy.
and Meta. Revenue per employee has inflected up over the last 2 to 3 years. Part of that has to be efficiencies coming from AI.
Yeah, 67.90 has to fail for this position to stay alive.
I think there's major differences and 1 or 2 similarities.
Yeah, no, you did. I mean, I think it was Sundar Pichai yesterday from Alphabet who said half their code now is being written by AI. It's being reviewed, he said, by humans. But I mean, that gives
I have to
goes
see
your
this
point
through.
in terms of productivity.
Yeah, we are. I mean,
Jesus
again,
fuck.
I'll stick with this.
Are you
If look at
serious?
Operating income or revenue per employee, it is dramatically inflected up. It's gone up 30 to 40% for some of these names. And names like Meta, it's up 70% over the last 3 years. Now, there's a lot of noise in there. There's a lot of factors in there.
I have to watch
Part of
this
it is that
closely.
They really curtailed hiring, and so that'll increase your revenue per employee. Or they also fired people. Like, yes, some of the people they fired must have been pretty inefficient. So there could be a lot of factors in there, but it's hard to avoid a conclusion that these companies aren't getting a better return on their AI spend, and it's showing up in that revenue per employee, and it's helping them develop better product for their customers, both consumers, us, and for advertisers. That's clearly the story from Meta, and that's why the company's
Wow,
market's giving
what
it
a
little bit
bounce.
of a green light to continue to accelerate
this
that spend. As long as that revenue growth stays high,
just
it's a
didn't
green light.
accelerate.
That's a good point.
Wow.
Mark, thanks so much. Mark,
Thanks,
for us.
Leslie.
Meantime,
Because of these confluences right here. That was a good bounce. Expectable bounce.
Next. Plus a tough October for the big banks, but could results next week be the catalyst for a rebound? We'll get you ready for that. And is Lulu a lemon? The company's founder, Chip Wilson, slamming its current trajectory and board in an ad in the Journal today. He'll join us exclusively.
This is another short setup, so that's why I can't really stop out right now. Yeah, I don't like that candle formation on the 2 at all, actually. If it makes a new high, then I'm out. The market has its ways, man. That's a nice stop wick on the 5. A really nice stop wick on the 5, but it's my hold 67.90 though. See, like buyer stepped in here, buyer stepped in here. This it was resistance, became support, went up, not the bounce. So this might just spring back up and stop us out. But if it makes a new high now, then I feel like I have to get out. Just for the sake of my position, then it's gonna probably like just sweep me off. It's probably just gonna sweep me out and come right back down. But I gotta be smart about this. Gotta be really smart about this. Yeah, this candle, bro. Wow, this shows a lot of buying pressure, because you went top wick, inverted hammer, and then became a full painted green candle. That's crazy. We're so close from getting stopped out. I'm just not. It's just not looking strong, you know. Even though the 5-minute candle is scary, the buying volume is declining. It's so hard to read sometimes that it's gonna stop us out, boys. Wow. Fuck, bro.
Bitcoin's in the red for the week, but still trading at $120,000 a coin. UK's biggest retail investment platform, Hargreaves Lansdown, issuing a stark warning around the sector, saying, quote, Bitcoin is not an asset class, and we do not think cryptocurrency has characteristics that mean it should be included in portfolios for growth or income, and shouldn't be relied upon to help clients meet their financial goals. Performance assumptions are not possible to
that's
for crypto, and unlike
it's a
other
B setup for longs.
Advice comes after regulators in the UK lifted a long-time ban on retail access to crypto exchange-traded notes.
It's a B setup.
It is day 10 of the shutdown, and the market continues
Yeah,
to find
this
alternatives
was
to
too
use
powerful.
Bitcoin without government data. Well, luckily next week we get bank earnings, which should yield some fresh clues about the economy. Yes, the third quarter numbers are backward-looking, but there are plenty of metrics that can provide clues about the future. Guidance, particularly on net interest income, the profitability metric for loan making, will be a key indicator of demand. Investment banking pipelines are a barometer of corporate confidence, and the amount that banks are setting aside for bad loans will show how they feel about credit quality right now. And that element is becoming increasingly important on the heels of several bankruptcies in the auto sector, which has embroiled hedge fund subsidiaries at Jefferies and UBS, plus a host of other lenders. It hasn't impacted the perception of the big six universal banks to a large extent. JP Morgan, Goldman Sachs, Morgan Stanley, and Wells Fargo trading right around their all-time highs heading into next week, guys.
But Leslie,
So
I'm just
far
looking
we
now
have
at the
lower
alternative asset
lows, lower
managers, which
highs,
we mentioned at the end of
lower
the
lows,
9
lower
o'clock
highs.
broadcast,
This
but
is
they're all now down
not
rather
very
sharply
good.
yet again.
So if you come in now,
Blackstone, Apollo, Blue
even
Owl,
though this was a long
Ares,
setup here, it might be
I mean,
short-lived.
we talk a lot about private credit. You cover it. Is there a concern there from this bankruptcy that somehow, I don't know, is saying something larger about the risk that they're taking?
So there's an important distinction to make, because at least when it pertains to first brands, you look at some data from KBRA, and they say only about 4% of their exposure was to private credit as we think of it as direct lending. Now, the big concern around the indebtedness of first brands tends to kind of fall into this category of off-balance sheet, short-term financing, supply chain financing, inventory financing, receivables factoring. It's not what we tend to think about with regard to direct lending as we talk about private credit, largely what Ares and KKR does and Apollo does. In fact, I was told that Apollo was actually short First Brands debt going into the bankruptcy. So they have, one of the analysts I was talking to as it pertains to alternative asset managers and how they've gotten embroiled in this whole thing, he basically said the market is reacting first and asking questions later. But so far, there hasn't been any real direct correlation to private credit as being culpable in this bankruptcy in the way that we may think of, with direct lending and taking on too much debt. I think that was the conclusion that people initially had.
Right.
But really, it's this off-balance sheet, more niche, opaque type of
Although
financing.
niche is an interesting word because there have been attempts to frame it this week, and we talked about it with Santoli yesterday. Barron's, citing J.P. Morgan, says this sort of non-depository financial institution lending is about a third of all commercial and industrial loans.
And we saw that with Greensill, 3 years ago.
Right.
And technically it falls under the umbrella of private credit if we were to define that as private transactions between First Brands and their lenders. It just needs to be kind of distinct from private credit and direct lending, which is often what we talk about, and kind of what that means for the system and the interconnectivity that has with the traditional banking system as well.
We were showing the BDC, by the way, for Blue Owl. OWL is the correct ticker for.
Wow. Look at that rejection.
By the way, 31.
That is insane, boys. I couldn't have not held up through that. That's, wow, what a breakdown.
And by the way, just real quickly, this
What
is
a
not to say that
breakdown,
private credit
bro.
ultimately won't be culpable
Let's
for
wait
some
for-
bankruptcy down the road.
Jamie Dimon's been calling
Put
for
the
this for a long
Nvidia's
time.
going.
Diamond, Jim Chanos, we've heard it from lots of people. It's just, I don't know if we can hold First Brands up as like the poster child for private credit gone wrong at this point in time.
Wow, Nvidia just made a new high.
Watching those bank earnings
That's right.
very closely.
That's right.
With Leslie's help. Let's get a news update now. For that, we'll go over to Dom Chu. Dom.
Good morning, David here. Israel's military said a ceasefire in Gaza went into effect today. Thousands of displaced people in Gaza streamed back north to their homes as they celebrated the news. The pause in fighting came hours after Israel's cabinet approved a deal to exchange the remaining Hamas hostages for Palestinian prisoners. There are still questions about the broader plan to end the war, including how Hamas will disarm and who will govern the territory in Gaza. The U.S. will reportedly send about 200 troops to Israel to help support and monitor that ceasefire deal. They will be part of a team of partner nations, non-governmental organizations, NGOs, and private sector players as well, according to the Associated
Let's
Press.
see if Nvidia, we can play break and retest of all-time highs. Let's see.
That will help facilitate the flow of humanitarian aid to Gaza. And a Venezuelan opposition leader is your newest Nobel Peace Prize winner. Maria Corina Machado is living in hiding right now after trying to challenge leader Nicolas Maduro in the presidential election. The committee called her a woman who, quote, keeps the flame of democracy burning amid a growing darkness. Congratulations to Ms. Machado. Thank you very much to you. And David, I'll send things back over to you.
Okay, Dom. Thank you, Dom Chu. After the break, Lululemon's founder Chip Wilson will join us, fresh off a full-page ad in the Wall Street Journal that slams the company for, quote, chasing Wall Street at the expense of customers.
Have to wait for the retest.
As a owner of 12% of the company's shares, and of course we'll get the company's response next. And on Monday, big interview for you, an exclusive with Oracle's new CEOs, Clay McGorrick and Mike Sicilia. That'll be live from Oracle AI World in Las Vegas. That will be in the 11 a.m. Eastern hour right here on CNBC. We'll be right back.
Wow. You might not give us an answer, guys. Just doesn't look as strong. Nvidia just made an all-time high. We're gonna go for the break and retest and go higher. Let's see. We gotta let this play out. We have to let this play out. That's my stop right there. Need a close above the 95.30 on the 5. I might have jumped the gun. He's holding it slow. Let's see. Doesn't look very good, but because they're breaking retest and hold. We might get lucky, but yeah, the break and retest setup did not hold.
Welcome back. In a paid advertisement in the
Did not break with conviction.
Founder Chip Wilson likened the decline of the athleisure brand to a plane crash due to a, quote, series of mistakes. Lululemon responded in a statement to CNBC denouncing the ad and the company's founder, saying in part, Chip Wilson has not been involved with the company for a decade, and he continues to make inaccurate and misleading statements about Lululemon, our history, and our board and leadership team. Lululemon shares are down more than 60% from their peak in 2023, but they're up since Chip Wilson left the board in 2015. Wilson still owns roughly 12% of outstanding shares. Let's bring in Chip Wilson, the founder of Lululemon, also a board member of Amerisports. Chip, thanks for the time today. Good to see you again.
Oh, hi, Carl. Thanks for having me.
What was the motivation to place this ad?
Well, I've been in conversations with Lululemon for a long time. I've tried to, help the board out in as many ways as I can. And quite frankly, they weren't listening. And I was predicting exactly what's been happening now with the stock dropping as much as it has. And I think it's time to step in and be public about what the real issue is. And that's not necessarily the management. It's not the weather. It's not the consumer. It's actually the board of directors and the ability of it to hire the right kind of management.
You go through in the ad what you call these series of mistakes. Can you sort of briefly summarize which ones you think are the most important, or in what order you think they took place?
Well, I call it the Gapifization of American retail. And when it goes public and loses its founder or its the head of product and brand. And when that happens, the board comes in, more of a metric type board that's more beholden to Wall Street and quarterly numbers, and it hires people that can deliver specific quarterly numbers. And those people are generally very good in everything, but they're not creative, and they tend to use algorithms to buy and sell what's sold the year before. So basically, innovation stops.
Check it out.
And so when that stops, then you start
It worked.
losing great people. You start losing great people.
Let's look for a setup. It might happen right here.
Those people
The next
leave,
5 minutes.
and then it's a snowball effect from there.
Yeah, it might happen the next 5 minutes, boys.
Hard time hiring good people, board of directors.
See.
So you don't really think it's about the macro or challenges in China, certainly things that the company would point to, factors that are obviously have to be managed, but not necessarily in their control.
Whenever I hear management anywhere talk about, it's the weather or it's the macroeconomic, that just tells me that the company is not positioned the product to be differentiated in the marketplace in order to avoid all that. That has always existed.
Are you going so far as to provide a prescription, a fix?
Wow, 90 is holding, boys.
Inside of my ad in the Wall Street Journal, yes, I think everything
67.90 is holding. That's crazy. That shows you this thing wants to go up. Maybe we should be looking for long setups.
Put the right people on the
You
board.
know,
It's not like Lululemon doesn't have great people on the board, but when you have
this
ownership
might
on
want to
the
go
board,
long.
as I've seen in some other boards that I've been on,
This is a
it's
chop.
amazing how
Oh my God, look at that.
decision making overpowers, and it's much stronger and better returns, and for a healthy.
Wow, what a crazy chop.
With board of directors who don't have interest in the company.
Chip, it's David Faber. You know, I mean, you have a fairly sizable position here. I'm not sure it's as large as 12%, but I know it's still a significant stake. We talk to activists all the time. You're kind of approaching this almost in that way. Why wouldn't you get together with an activist investor of note, perhaps, and try to replace board members then, if you feel this way?
Well, I think it is time for some action. You know, I'm looking at my options of that. I actually had come to the conclusion that many of the activists may not know that I would actually be interested in siding with them in order to do something about Lululemon and maybe to replace some people on the board and change the trajectory of the strategy.
Do you feel like, were you, let's say, successful in doing that, that it would truly result in a change in the trajectory of the company's strategy and therefore stock price?
Well, yes, because I think everything's going to the top of it, and basically what I see now is a trajectory that's happened over like 10 years, and it's because this isn't you know, like I say, a plane crash doesn't happen because of one mistake. It happens because of a series of mistakes, and I think it's Lululemon's in a position right now where it can't keep doing what it's always done, or it's going to keep getting what it's getting.
Have you had discussions with potential board candidates that you might put up if it gets to a proxy fight scenario?
Well, lots of people, approach me too and would like to be interested. And of course, I've been deep in this business and probably maybe in the most knowledgeable people about technical apparel and shoes in the world. And I'm in no lack of people to be connected to. Yes.
Or to those who might say, Chip, you're just, I don't know, you're angry still about not being a part of the company any longer or bitter about it. What's your response?
Let's go short.
Well, I took some of my money out of Lululemon and I put it into Amber.
This doesn't work now. I don't know what else is going to work today.
Since last year, and I think because I get to see a world-class board of directors and I see what's possible at Lululemon, and something great can still happen there, but time is limited.
Do you think Lululemon should remain an independent company?
Well, I think either two things have to happen. Yes, either it needs to fix what's happening right now. Either it needs to be taken private so it can make those changes outside of the public realm, or it needs a very, very strong board of directors with a vested interest in doing long-term planning to kind of get through the next 3 years, which is going to take restructuring for sure.
I might hold this longer when I have to
When you
sell
say time is limited,
around
I don't
here.
see anything in the ad that sort of points to liquidity concerns or anything that would point to a balance sheet concern. Have you gone that far?
No, I don't think. I think Lululemon is amazing. I think it makes a tremendous amount of money. Now, what it's been doing, it's been brand harvesting, though. So when you look at the stock drop over the last year and a half, and actually I would call it something that started again 10 years ago, I think it's it's all been in the making of a very long-term. Oh no, I don't know what I was going to say. That actually 50% of the value of a brand company like Lululemon is set up in the power of the brand, and I think that's the 50% that they've lost, and the 50% that they don't know how to bring back.
What was your first indication that they would be having material troubles?
Well, around the brand, I think it. When I see the company losing people with the institutional knowledge and starting to go to competitors, I think, but that was starting like 10 years ago. But because I know enough about the business and how things, work generally in business, those are, the canary in the coal mine.
obviously has made an effort to argue that you're not necessarily close to current operations, although you clearly know.
So
history.
186.
Do you feel comfortable making these statements?
And then
vis-a-vis
watch for a
what's
breakdown.
happening inside the company today?
Well, like I say, I'm probably the most vested person in technical apparel in the world. I travel the world extensively. I think I've got my pulse in this business probably better than anybody in the world. And for them to think that, for anyone to think that I'm not on top of things would be a joke.
Finally, what's been the reaction to the ad so far?
Well, it's been phenomenal, actually. I'm really impressed by it because I never know. I mean, I'm putting it out there, but I mean, for business people who actually understand how businesses work, they can see how I put the step in about how there's like rhythms and nosedive and what's occurring. It's a process that's very, very common. And instead of my suggestion for one of them was to go to a consulting company 4 or 5 years ago and ask them why the gap
Lower lows is wedging.
out of it. They finally did that, but obviously.
Jesus fuck, bro.
To go through this process.
You fucking kidding me?
Differently with other companies in the past. We'll see how this one proceeds.
That's crazy. That's a chop. I'm gonna stop putting positions over there. This on that 692.25. Wow. Yeah, this is a chop. I think I'm gonna keep my money. I think I'm gonna keep my motherfucking money right now. Yeah, this is not a level that you should even worry about anymore. I'm gonna erase this thing. I don't give a fuck. Well, that's bullshit. I thought that I was recording. Market dropped 80 points in, wow, 5 minutes. That was insane. Because of Trump's tweet. This thing was paused. I thought that we were rolling. I bounced from the 20 EMA daily, SMA up for another $175, but then I lost a little bit. So I think I'm gonna stop. This is a little too crazy. You can't really see what's going. You can't really tell what the fuck's gonna happen. This is insane. This is too much volatility. Anyway, guys, I'm gonna pause this again. Maybe I'll come back, maybe not. But if I don't, I'll see you guys later. Let's see if he hits 700. Let's see how he goes. It's looking like a trap, dudes. He didn't give us a perfect entry. I'm like hesitant, man. This can just, oh my God. Big boys are unloading it. This is pretty fucking crazy.
Johnson, the Wall Street Journal reporting the company is looking to buy Protagonist Therapeutics. Protagonist shares spiking before being halted, currently up around 9.4%.
Yeah, man, I'm frozen. I can't really deal with this. Like, this is crazy.
Biotech investor Rod Wong later this hour.
Meantime, major airports across the United States reporting thousands of
Fields are slow.
Shutdown. Those disruptions being exacerbated by staffing shortages as air traffic controllers go without pay. It's a challenge our next guest says could escalate from delays to flight cancellations if the shutdown lasts a long time. Joining us this morning is Marion Blakey, former FAA administrator, NTSB chair, CEO.
Wow.
North America.
Wow.
Time and the help. Good to see you.
Dude.
Good to see you. Thank you for including me.
This is fucking insane. Oh my God.
Well, it's a growing concern, I have to admit, because the shutdown is definitely affecting the air traffic system.
Oh my God.
Delays at big airports, for example.
This is fucking crazy.
A lot of connecting flights. That really does ripple through the system.
Dude.
At this point, I think we do need the Congress to understand that this is the kind of thing that I don't think the American public puts up with very well. Because it has a direct impact on their lives, both as leisure travelers and as business people.
Wow, this is panic selling.
We need to get on it.
This is insane. Holy shit, it's been a while since I seen this shit happen.
We've been drawing some parallels.
This is insane. I'm frozen. I don't want to give my money back. Look at this. Oh my God, guys. Dude, it's 120 points that it went down. Oh my God.
I think so, because I think members of Congress who, of course, fly out of Washington, Reagan.
Wow. It's too much volatility.
They're going to be very aware and directly affected themselves. So I think we're going to see a lot more emphasis in the Congress on fixing this. And it is.
This is fucking crazy.
Particularly the Senate to get on with.
course, this comes against a backdrop where we've already seen shortages of air traffic controls and so forth that they've been looking to build up. What do shutdowns
Oh my
mean for
God.
morale among air traffic controllers and just the appeal of getting into this industry in the first place?
You know, my experience is that air traffic controllers are incredibly motivated people. It takes a particular, person who can take that kind of stress, has the technical skills, so they are a very important asset to us in the system and in the U.S. But they're people like anyone else. And when they find that they are not getting a paycheck, even though they're deemed essential workers and have to come to work, it's not a discretionary thing, it's very hard on them. And I think some who may have opportunities for a side job, something else to supplement family income, have got to be thinking about that now to add on to the duties that they have in the tower. And to tell you the truth, the last thing in the world we need are people in the towers who are distracted by personal problems that are very real.
I agree. I mean, if we're trying to recruit controllers in general, demonstrating to them that they have to be put through this kind of non-pay period is not the greatest recruitment tool. That is for sure. We will hope for the best in the coming days. We have to keep this a bit short today, Marion, but please come back. Good to see you. Marion Blakey, former FAA administrator.
It's an important problem.
It is absolutely an important problem. Later this hour, the bull case for biotech. We'll talk with one prominent investor in the space benefiting from Novo Nordisk's more than $5
Dude,
billion
this is
deal
crazy.
yesterday, how he's thinking about current policy
Crazy.
Plus, the former assistant U.S. trade rep for China Affairs is with us next, reacting to this market downturn today and the recent presidential post regarding China. That's in a minute.
Dude, these are too volatile. Wow. This is, dude. I don't know if I go short, if I go long. I'm just gonna watch this. This is like better than a movie. Oh my God. Look at this thing. Like unpredictable, dude. Like unpredictable, bro. Oh. Dude, unfucking predictable. Holy shit. Look at this. Wow. Dude. He tried to catch the bottom of this thing? Wow. 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 That is struggle bus, bro. Oh my god. That is struggle bus so hard. Oh my god. Wow, everybody's panic selling. Dude. That you catch a move like that? Oh my god, dude. To the downside, look at this. This is insane. Holy shit, bro.
As you can see, it's become a busy Friday news-wise. Let's get a news update with Courtney Reagan. Hey, Court.
Hi, thank you, Carls. The U.S. awarded 10 construction contracts worth $4.5 billion to construct a wall along the southwest border. The Department of Homeland Security made the announcement today. The construction will add 230 miles of barriers to so-called smart wall border security system that includes steel barriers, waterborne barriers, patrol roads, lights, cameras, and more. Dominion Road System has a new owner.
Holy shit, dude.
Proven conspiracy theories from President Trump and his allies has been bought by a former Republican elections official from St. Louis. The newly formed company is called Liberty Vote. It has already promised to follow the president's executive order calling for sweeping changes to election policies. Multiple judges put the order on hold for violating the Constitution. March Madness icon Sister Jean Dolores Smith has died. She became a national celebrity in 2018 as she cheered from the sidelines during Loyola University's unlikely run to the Final Four in the NCAA basketball tournament. She stepped back from her duties at the school last month. Sister Jean was 106 years old. That is a life well lived. God bless her. Carl, back to you.
Bracelet, little heart. Oh my god.
With its quarterly list of top 25 tactical trades for earnings season, familiar segment on this program. Their top upside names include Broadcom, Disney, Celsius, and Wynn. Some downside names include Enphase and Supermicro. List has outperformed the S&P by 3% annually over the last 13 years. And joining us here at Post 9, as always, Goldman Sachs Head of Derivatives Research, John Marshall, is with us.
Oh, God.
Happy earnings season.
Thank you very much, Carl.
You know the pattern here. We generally try to ask for thematics, or maybe sometimes there are, sometimes there aren't.
Yeah, I think the real theme is real bottoms-up work to look at the estimates for the next year, and our analysts do it throughout the department. We have a new list every quarter. We never repeat names from the prior quarter to keep things fresh, but we do have some AI names on here. Broadcom's probably the one that's going to receive the most attention today. It's one that Jim Schneider sees a lot of upside to, and unlike some of the other names that are in the AI complex, he sees a lot of visibility in their earnings with the custom compute AI chips.
It's interesting to single out Broadcom in a constellation of a lot of names that get tons of attention, but as you point out, it's relative to where consensus is, yes?
Yes, absolutely. High single digits, he's above consensus for the next year, and it's really about that visibility.
There's been quite a bit of volatility at the single stock level, and dispersion is noticeably high as well. How do these names usually perform in environments like that?
Yeah, absolutely. So you're correct to point out we've had monumental volatility over the last quarter on earnings day. So the earnings day moves for stocks in the S&P 500 over the last quarter are the biggest since 2009. So that tells you the level of fundamental volatility that's happening. We have a lot of themes like AI or government policy.
Should I take a fucking short?
Benefiting some companies and are a headwind to other companies. And I think that's why we're seeing so much of this move on earnings day when we get that information.
How much of it is leverage in the system and some of these, single stock, triple leverage, what have you?
Yeah, we do a lot of work on that. What I would say is there's unquestionably more options activity now than there has ever been. And it has really ramped up in the last month. But when we look at that activity, when we look under the surface, we see in single stocks, Tesla options volumes, that's the real driver of this. That's now 27% of all single stock options volumes. And on the index level, zero-day options on the S&P are now 63% of all index option volume. And the characteristics of these two, the trading in these two, is very different than what we think of as normal, right? single-day options or zero-day options on the S&P is equal puts and calls. We're used to people really using S&P options as a hedge. So we're not as worried as the headline figures would lead one to believe that we're going
Oh, there. See, the volatility is just knocking me out. This is fucking crazy, dude.
Brief thesis behind that one?
Yeah, Michael Ng, the things he's really focused on there, their direct-to-consumer business is doing well, their parks business is doing well, and they have 3 cruise ships on the horizon. So he sees not only near-term that they're going to beat, but also over the next year that we're going to see some increases in consensus.
Right, yeah, we're highly attuned to travel demand at the moment. Yeah. Industrials, obviously, the cyclical part of the market's gotten so much attention. Johnson Controls, I thought, was interesting.
Yeah, Joe Ritchie is really focused on the buyback opportunity there. Buybacks are very scarce in this market. We've really switched over to spending on CapEx, and so those companies that are able to buy back stocks, I think are going to get some attention from investors.
Is there a travel theme that you see kind of playing
Got a
in
bad
here with
feel.
and Disney? You mentioned the cruise ships. Is that because basically we had a guest on last hour who said that discretionary consumer spending was actually looking a little more muted. So I'm curious if you feel like that's due for a shift, at least as it pertains to travel and spending on travel.
Yeah, we are really focused on the idiosyncratic elements, the stock-specific elements, but you're right.
Wow, bro.
Lizzie Dove sees a resurgence in volume.
Wow, bro.
Partially due to their loyalty program. Also, there's a UAE
That is crazy. I gotta stop trading.
Likely to get people to pay attention.
Wow, I gotta keep my money.
Madison Square Garden, MSGE is on that and on the list, and that's really due to the experiences is what people are interested in, and that has led to a lot of business in there.
Finally, on a morning where financials were helping to lead, you do pick out Citi.
Yes.
We're going to get results in the coming
Hey.
days. Can you talk about how it
Dude,
fits
it's
relative to
untradeable.
the group?
Yeah, absolutely.
It's
So Richard
untradeable
Williams
right
is
now.
one of his top picks going into earnings season. He sees that they're both having fee growth, but also the business simplification aspect of Citi. He thinks that people are going to really respond to.
Yeah, they're the best performer of the big 6 so far year to date. Citi, Goldman are the 2 top standouts. So we'll see kind of how much of that is priced into earnings next week as well.
While I have you, before I let you go, VIX at 21 happened in a hurry. We've been covering the president's post. How notable is it?
So this time of year, it's something we should expect. We wrote a report a few weeks ago about the seasonal pickup in volatility. For one reason or another, October tends to be the highest volatility month of the year. We think that's because companies and investors get nervous around this time of year. You're trying to make your year-end numbers. If you're a company, you're trying to make your year-end numbers through this last flurry of catalysts if you're an investor, and that leads people to really kind of pull out of the market quickly and go into the market quickly.
We are getting close to the end, and the news flow has picked up. John, as always, our thanks to you. We love this list, and we'll see how it does.
Thank you very much.
Joining us from Goldman. Meantime, stocks have taken a sharp turn lower as the president did threaten this massive, he called it massive, increase in tariffs on China. Joining us this morning, Jeff Moon, founder of China Moon Strategies, former assistant U.S. trade rep for China Affairs. Jeff, it's good to have you back. Thanks for coming to the line.
Thank you.
Do you think this moment was inevitable?
I think so. I think we need to really step back. This is all part of the bargaining process. Both the U.S. and China, I think, want to somehow get together and reach some kind of an accommodation without resolving all of the trade disputes. From the Chinese perspective, in the meantime, the U.S. has been increasing measures against China, for example, adding companies to the entity list, and there's a lot of rumbling in Congress about additional export controls, and the Chinese I think wanted to draw the line and say, stop it. Let's start bargaining here. So what the Chinese have done is several goals. One is, frankly, retaliation. They are mirroring, with their rare earths measures, they are mirroring how the U.S. treats semiconductors. The U.S. Foreign Direct Product Rule says that any element of a semiconductor that has American technology enables the U.S. to regulate all of those semiconductors. And the Chinese are doing the same thing with our rare earths. The Chinese are also trying to pursue their usual strategy of divide and conquer, which means that they are trying to get pressure on the U.S. government from semiconductor companies and perhaps from other countries as well, to get the U.S. to soften some of the measures that are out there. The Chinese are also trying to pursue their goal of self-sufficiency. I don't buy the argument that we need to sell the Chinese because we'll get them addicted to technology, because they have always said they want to be independent and develop their own technologies. So that's not valid to me. And they want to get the U.S. to relax tech restrictions as well. So there are lots of goals that are going there. The question is, what are the real intentions? I think the Chinese want U.S. chips, despite what they say, and I think Trump wants to go to meet them in Korea, despite what he says. So nothing has happened that is irreversible here.
Right.
This is all snarling and bearing fangs at each other, and I suspect that that things are going to calm down. Trump's threat to impose massive tariffs is a hollow threat, because he exhausted his ability to impose massive tariffs months ago, back in April, and I think the talks will resume and they'll reach some kind of accommodation.
Interesting. So to the degree that some argued the Chinese were trying a rope-a-dope strategy, trying to elongate the discussion cycle, did you ever buy that? And if you did, is that period now over?
I've always bought that. That is always the Chinese strategy, to delay. And maybe we got to the point where the Chinese felt like they couldn't delay because the pressure, like I said, from the entity list and other measures got to be too much. But that's always been the Chinese strategy. The Chinese strategy has always been to give the Americans just enough to feel like it's worth continuing to discuss, but not to shut down completely so that there's nothing to talk about and massive sanctions come. But now the Chinese are saying that, if the U.S. wants to press ahead with these sanctions, well, you know what? We've got some very serious leverage on rare earths, on soybeans, on other things that the U.S. needs, and we're ready to apply it. And I suspect that's been said behind closed doors in Geneva and London and other places between diplomats, and now the Chinese have finally decided to go public with it. And the really interesting thing is that China, because of the leverage that it has, is the only country that can behave this way with Trump and not suffer what it perceives to be, disastrous consequences.
Right. They have, 90% of the rare earths market. So when you say that, China can pursue living independent of the U.S., it's not quite the same for the U.S., right? They need access to that market for rare earths.
Well, another interesting difference is that rare earths is an immediate need for the United States. Chip technology is a prospective need for the Chinese. If rare earths are cut off, there are many things that just don't happen, many products that don't exist anymore. But chip technology is something for China's future, artificial.
Yeah, I paused there as soon as I got a position. I don't know, so I made $20 more on this rejection of the 600-700. So, dude, just major levels now. I'm not looking even at EMAs or anything like that. It's just major level playing. If you want to play this volatility, this is fucking crazy. This is insanity, boys. It's been a while since I've seen this.
money movers, take a look at the XBI Biotech ETF on pace for its best year since 2020. And news breaking earlier from the Wall Street Journal that Johnson & Johnson is looking to buy Protagonist Therapeutics. Our next guest is a top shareholder in Protagonist and a longtime investor in the biotech space. Joining us now, RTW Investments Managing Partner and CIO, Dr. Rod Wong. Doctor, thank you for being here today. So there's been a string of acquisitions in this space in recent weeks in biotech. Do you expect to see more consolidation here?
Yeah, I do, Leslie. Thanks for having me. Honestly, coming into the year, I expected to see M&A pick up faster because you have a friendlier FTC, interest rates have leveled off, but then you had several months of pretty significant policy uncertainty. So I think it just delayed things a bit. But starting last month, you're exactly right. You've seen a string of about half a dozen deals, and I expect more.
Yeah, it's certainly a boon for your portfolio. I mean, up 36% right now, at least for Protagonist. You also have a view that biotech's slump, that 5-year slump that we just showed a chart of, is over. Why do you see additional rallying from here?
Yeah, I mean, when you think about it, even though the sector has kind of recovered from the lows, kind of peak policy uncertainty, started around Liberation Day in April, year to date, the sector's only up high teens, right, which is roughly in line with the Nasdaq and a little bit ahead of the S&P. But that's after this bear market that you just mentioned, right? It's 4 years of underperformance versus the S&P. Prior to this bear market, the biotech sector's never underperformed more than 1 year in a row. So it's really...
We might get another short position right here, depending how this price goes over there in the volume profile.
The fundamentals are improving a lot.
I'll keep an eye on that.
The last bull market cycle, it was the introduction of all these new technologies, which everyone knows about now, like the cell therapies, the gene therapies, the RNA medicines. And while the science was early in the last bull market cycle, in the last few years, it's really matured. And now you're really seeing the successful businesses be born out of that. And so the combination of, low valuations and improving fundamentals, I think sets up well for the next cycle.
That's interesting, Doctor. I wonder whether you think the part of the ongoing recovery for the space will be in small caps, these sort of nascent innovators, M&A optionality, or if it's more about larger companies, more expansive balance sheets, that kind of thing.
Yeah, you know what, Carl, that's actually a really critical question. Because the last cycle was about those small companies, right? It was about the introduction of new technology, and so it was young, platform-based companies.
That's why I didn't go to the touch, see, boys. That's why you don't go to the touch. You wait for a wick. Now that's too much risk. It went 5 points. I don't think I can take a short on this candle, even if it reverses. I gotta wait for a second candle setup. Let's go now. Yeah, that was too much. I gotta wait for this next candle. That was too much.
Yeah, no, that's really interesting, Doctor.
This can still work, but that was too much risk.
Discussion about whether companies are staying private for too long, and I know you believe that actually in the biotech sector that hurt the sector by going public too quickly. Dr. Wong, thank you so much for your time.
I'm gonna hopefully get another retest and another fail.
BLS says it will now publish the September CPI number. We're going to get it Friday, October 24th, 2025.
Yeah, I'm gonna wait for another retest and another fail.
We'll keep monitoring that as the Dow and the
Maybe get in there.
S&P, though, still down more than 1%. Stay with us.
Maybe get in there. This is looking like, see this little belly here? This whole movie just didn't have a belly. Yeah, this is a little scary. Slight change of momentum. Yeah, I need a test and a rejection. I can't just jump in right now. I need a test to the 6,700, maybe even above to that little wick and just go back down. But still, this can be a chop from now on. You know, price is consolidated, not consolidated, but like, I mean, it is compared to what you did before, but this might be a bad spot too. You know, it's too many tries. This looks like sellers are getting tired now. See what the next 5-minute candle does. Let's be patient. It's just scary to short there. Maybe I missed an entry. Had a 5 minute collapse. I pause again, guys. Waiting for the price to get to this area right here. This is a trend line, a very important trend line on a daily chart. So around 55 and 50, it's like if it wicks up, I will probably go in with some calls and see and watch a good rebound, because there could be a 50-point move back to 6,700, because that's a daily big level, uptrend level. So let's see.
I think the sharp reaction to this news shows how price for perfection markets have become and how subject to a little bad news they could be. Markets were at 22.9 times as of yesterday. You've seen surging optimism looking at the AAII.
I gotta take the dogs out to pee. I might miss this entry.
Any risk from tariffs. Let's remember,
Gotta take care of the doggies, right?
We're already at 30%, and you know a massive increase would bring rates back up to levels that could be incredibly disruptive. The market is, high betas underperforming today. It's down by 3.7%, where defensives are outperforming. You're seeing credit underperform. The reality is markets have become solely focused on the good news around AI, and they're ignoring any potential risks from the shutdown, incremental weakening in the labor market, and so you get a little piece of news that's unsettling and you can see a shock like that.
There's definitely, Steph, I think to Rob's point, been a fair amount of complacency, certainly around the issue of trade and tariffs. We haven't mentioned those two T words in a long time because, as Rob said, we've been fixated on AI. We've been thinking about earnings and how good they're going to be and the fact that the Fed's cutting interest rates, but we're, certainly reminded right in our faces today that these issues still exist. An issue with the most fierce competitor that we have, I think, globally on trade.
So we're only down 1.3%.
Okay, I might have to take the dogs to pee, and if I missed the answer, I'll come back. Okay, this is it, guys. See you later.